And good afternoon. Welcome into Market Talk here on this Monday, May 9th. Great to have you with us. I'm your host, Jesse Allen. Thanks for joining us, making us part of your day. MarketTalkAg.com. That's our home on the web. Find us there. Find all of the latest ag information, market news, and more. MarketTalkAg.com. Rough day in the markets today. Let's dive right in, not waste any time. Say good afternoon to our good friend, John Heinberg with Total Farm Marketing. John, good afternoon to you, sir. Not a way to start a new week. Coming back after the weekend, and we saw the big stock market pressure at the end of last week, and that seems to be carrying over. That really kind of just gave us a risk-off mentality, it felt like today, John.
Yeah, very much so. I mean, today was probably a little bit more tied to the macro side of it versus weather or things of that nature. Like you said, it started on Friday, and I was kind of talking to a few clients this morning, just kind of saying, I'm trying to decide which one it is here. But when you got the stock market pushing down to levels where, we're pretty key support in that market, if it breaks through, there's a lot of downside room on that market. So that's got this everything a little bit spooked. Saw a big push lower in crude oil today, pushing up to $7 a barrel lower one time during the course of the day. And the volatility side kept popping up during the course of the day. When we look at that VIX, when it gets into that 30 plus window, that just tells you that money managers need to move some things to the sidelines. I think the market would have been pressured anyway today because of the weather forecasts that are out there and the thought that maybe we get some planting going. But at the same time, maybe the aggression of some of the sell-off was, laid in here because of the way those outside markets performed.
So if I'm a farmer looking at the way we traded on Monday, obviously a lot of factors, but 75% or so of the corn belt's probably running pretty hard right now, trying to get in the field here to start this week. So, I mean, I take a look at where things stand, a big sell-off today, maybe continuing the rest of this week. What am I thinking here if I need to make any market moves just overall, John? Should I be panicking, or is this a more of a one-day kind of sell-off feeling to you?
Well, we're in a window here. Obviously, as the planting pace comes along, that maybe we see some more downward pressure. I am targeting, new crop to come down a smidge lower for both corn, maybe a little bit more on beans. I'm a little more concerned about the bean market right now than I am probably the corn and the wheat markets, just given some of the fundamental factors that are out there. But obviously, we got some movement to the sidelines. I did tell a few guys today, if you got some old crop, you're still looking at probably a $7 sale. Maybe you lock that in here just to be safe. See where you are on the new crop side. You still got good value in front of you, knowing that down the road that some of these fundamentals are still pretty friendly. The other piece of the puzzle today, we do have a USDA report this week. The funds are still holding a lot of positions. They were squaring some of those positions up last week or taking some risk off. Expect that number to continue to, be pressured as we get close to that report. And then we'll see what the USDA gives us for that new crop projections. We'll get those first tastes of 22-23 numbers here on that report this week. So there's a lot of little moving parts here, and it's a very logical window, especially with some improved weather, that we take some premium out of this market, only to set ourselves up for what happens after we get those numbers and how the market wants to digest those.
Now, you mentioned the corn and bean side of the equation there, and you mentioned you're a little more worried about the beans right now. I know both charts started to kind of break at the end of last week, showing some move to the downside. But keying in on soybeans, why are you a little more worried about that market right now, John?
I mean, the soybean market's getting pretty pushed here, getting to the oversold stage, but you start looking at the product side a little bit here. You go look at soybean oil today. We're down $1 plus. That July chart kind of closed under a key moving average there today. So it opens us up for some more downward movement. Are we going to see a little bit more break in that crude oil market? The energy sector is that outside market that's getting smacked around pretty good today, with natural gas down strongly again today and crude kind of following suit. That's been something that's been supportive under the soybean market all this time. And if we start seeing some, that value come out, they're going to take it out of the beans. And then on top of that, too, you look at soybean meal, we're poking at $400 a ton. Again, that's a chart that looks like it's got some downward flow to it, at least on the technical side. So if those crush margins start coming down, that takes the buying demand off the soybean market in general. which again just looks like it's got some room to fall. I'm not talking a multiple dollar washout, but get new crop maybe back down to the $14 handle. Maybe get July beans back down to the 15.50, somewhere in that window. We're still going to be in an uptrend. Okay, let's not get that out of the picture here yet. The market still overall is working higher, but boy, we're sure coming down well off these highs when you start looking at some of those variables. So again, we got to watch the outside markets. A lot of concerns there, at least right now, in terms of the impact that it could spill over into that soybean market, here overall.
John, looking at wheat tried to hang on today and then finally just succumbed to the pressure. But we got dryness in the plains. We have dryness in India, Europe. We have planting delays in the northern plains. They're not going to get any relief this week. It looks like we're getting more rain and just dismal planting conditions across North Dakota, northern Minnesota, into Manitoba. So you look at the wheat market today, finally giving into the pressure. But what are you seeing fundamentally in this market? Is there reason to move to the upside still, John?
The move last week, we kind of broke out of the wedge pattern that we are forming. Obviously today was pretty disappointing as, John, again, just that outside forces finally just started working on that Chicago contract, especially. We had new highs in spring wheat this morning. Again, just like you mentioned, we got weather issues across the northern plains. We'll see what the planting pace is on that spring wheat crop. Obviously, you got KC wheat still supported by the dry conditions in the south, and with some of the forecasts out there, talking 90 degrees plus in Kansas and in those regions with wind blowing today, that is just not going to be good for that crop overall. Curious to see what the ratings are. They're expecting them to hold fairly steady for KC wheat today, or the hard red winter wheat. So we'll see how that plays out. It was kind of the strength behind the corn, at least as it tried to work it off the lows midday today, was the move in that wheat market. So we still got to see where we are overall. Biggest thing still, though, for wheat, we're keeping a close eye on Europe. European milling prices continue to push to new highs again today as well. Even though the crops rated fairly well, we're seeing the net drying starting to kick in across Europe, which could bring that yield down. But we need to see some of that demand get over here to U.S. shores. We're getting close to the end of the marketing year here for wheat, and then we just haven't seen the export demand like we've needed to. And we'll probably see some of the carryout numbers maybe move a little higher on the report this week from the USDA. So that's bringing some caution into this market here. But right now, things do look good. Globally, fundamentals are still very, very key, and wheat supplies are tight. But it'd be sure nice to start seeing some more wheat business get here to the U.S. side of the border.
John, as well, weekly export inspections today look to be fairly bullish for pretty much all for corn, soybeans, and wheat. What are your thoughts there?
Yeah, we continue to see good shipments, especially on those soybean side. Obviously we're in a window we're not supposed to be. And, we got the agriculture or the census data from Brazil here for the month of April, just at the end of last week. And, we kind of seen soybean shipments kind of peak out well below last year's level for last year in April. And so that's a sign that, they have the poor crop and maybe those supplies aren't there. Dollars and cents wise, we're still a little bit expensive compared to those South American bushels. But it sounds like here after August on, at least until we get some more supplies out of Brazil, the U.S. is going to be the best game in town when it comes to those global soybeans. But with that being said, you still got a market that's a lot of pressure. And, don't get my negative tone here as, saying things are over. It's just a window. I think we can see some correction. I still like the upside. The fundamentals are still there. Again, corn shipments, corn sales look strong. Longer term, got another cut on that South American crop from an analyst out of Brazil this morning. So again, there's some things that are still brewing that make me friendly to the long term, but it's just might be a window here that we're seeing that money move out and taking some value out of this market.
WASDE report coming up on Thursday. We've alluded to that a couple of times. Any thoughts on that, John, here? I know it's early in the week, but any thoughts on what we could see with some of those numbers on Thursday?
The interesting numbers, obviously, maybe it's some of the reason we're seeing the movement here too. First off, we're going to get that first touch of 2022-23. We'll take those acre numbers from March. They'll put that in there. We'll see if they'll stay with the trend line yield, which is 181 per bushel on corn that we had at the Outlook Forum back in February. And, that's going to, and then we'll see the demand adjustments. Now, the expectations for carryout for new crop to be about 1.3 to 1.4 billion, with a yield number that high, that's going to seem pretty, fairly tight overall, with a whole summer of weather in front of us. So that's going to be interesting to see how they shake those numbers out. Old crop side of it, we're going to expect to see some tightness, of that carryout number based on the demand side of the equation. I'm expecting to see some more cuts there, or cuts on the carryout, adding it to the export side for both corn and beans. So we'll see how that plays out. Soybeans, we'll take those new acre numbers and we'll put them into the new crop balance sheet, and you're going to see carryover probably a fairly comfortable number, but still overall tight. And maybe that's some of what we're pricing in here at this window, knowing that we got a whole summer of weather to go.
John, let's talk livestock. Rough day in the hog market again today. Really just trying to find direction, but hogs down triple digits. Hogs and cattle, I would probably attribute some of the pressure today due to the stock market. But looking closer at this hog market and these charts, I mean, looks like we're tested some key support levels here now. John, what are your thoughts there?
Yeah, we are. June hogs down sharply again today. Another 280 lower, gapped lower for the second time. So maybe that's kind of our breakdown gap, that maybe we're getting to the bottom of this thing. I've got trend line around that dollar level, a little bit under 99, around the 99 point. Biggest thing for hogs right now here in the front end, cash market continues to be a bit of a struggle. Hog slaughter numbers were up last week over last year, even though on the year we're down a percent, a handful of percentage points. So, but we got some heavier weights coming through. We got more product out there, and that demand is a concern. Obviously the domestic demand with the U.S. consumer, where are they going to be if we continue to see some struggles in the economy and some money flow continue out of the pockets due to the inflation side? And then we're just not seeing that Chinese demand that we're counting on, that's been built into this market over time. Getting to a point, I think we're starting to get to be a pretty good value, getting oversold, but we're not done yet. The technicals still want to take some more money out of this thing, especially with that difficult close today. June under the 200-day moving average. We got to go back quite a ways in the charts before we've seen that again. So that just kind of flips things over, makes them a little bit more negative. So hog market, it's all about the technicals and the money flow at this window. And it just sort of feels like anytime we get a little bit of a break, we're getting pushed right back down. We saw that Thursday and Friday last week. Still like those longer term hogs, but right now the direction and the path with least resistance is still trying to find a low.
Cattle markets tried their best to firm back up, eked out a couple of green numbers on the board in some of those front months. What's your thoughts with this cattle market after today?
We're looking at cash probably still trading fairly steady this week. Maybe good jump in the choice carcasses at midday today. So that kind of just tells me maybe there's still some support there in that front month, especially June being at 130 and cash last week around 140. Nice recovery off some of those front end contracts off those early morning lows. So that at least tells me that there's some buyers out there. Again, though, we got those concerns about the whole macro situation. What's going on in terms of inflation? What's going on for consumer demand? That's just going to keep this market cautious. So with that, did like the kind of the price action as the day went on today, like seeing some more strength throughout the complex. But at least here in the short term, maybe we got some demand, we got some cash strength, or at least some cash prices over the board that keeps this market at least a little bit supported. Feeders kind of consolidating. Again, that tells me too, you got some outside market influences when you got corn prices, wheat prices down double digits, and we can't get a bid in the feeder market today. So that tells me at least there too, that the outside money is still looking to push cattle maybe a little bit lower, but it was still encouraging to see that market kind of run off those lows today, saying, hey, maybe we got a bit of a value down there.
Looked like as well, maybe some of that risk off trade went into the dairy market here to start the week. John, what's your thoughts with what we're seeing there?
Yeah, we're a little concerned maybe getting some cheese build up here where that global demand is. Again, it's that global economy is still going to be a big factor in this. Watching cheese prices, they've been trending lower on over the last handful of days here, and again another drop in blocks down to 12 or 229, down 6 cents. You got June trading almost $24 at the high of the day, or $24.50 at the high, starting to look a little overvalued. And now we're getting some of the chart action that's, looking at, we got some more room for this to drop. So right now, looks like the path of least resistance, at least through the dairy market, if it can't hold like the 23.50 level in June, is probably back down at least into the mid 22s. So again, we've had opportunities here. We've been grinding sideways. Haven't had the strength to get over top. Every time we seem to, the market seemed to fail, which kind of told us that we're getting tired. Now we're going to get that technical break to the downside, especially if we see that cheese price and that butter price and those products continue to get soft.
Well, John, plenty of great stuff as we kick off a week with these down markets. But as we get into a really busy week, Any final thoughts you have for us? The floor is yours.
Again, producers are going to be really running full speed. So, I talked to a couple today, weren't even aware what the markets were doing. Just make sure you stay on top of things in here. Again, obviously, you feel some light in things. Maybe go ahead and make some sales in this window. You still got some good value, especially if you're getting the crop in the ground and things of that nature. The volatility is not going anywhere. That's going to stay in place. And we're going to see some pretty wild swings in this market. So just kind of be ready for it. Again, fundamentals for grains are still supportive. But we may have to go find those lows first, and maybe before we come back around. Last year we put the high in around on the 7th of May for corn. Maybe we've clipped that number at least here in the short term until we really have some weather issues that can make that next leg higher.
Well, John, if producers want advice during a busy time of the year, they can reach out to you and the team there at Total Farm Marketing very easily. I know that. What's the best way to do that, John?
Sure, and give us a call, 800-334-9779. Shoot me an email, johnh@totalfarmmarketing.com. Again, don't forget about our website, totalfarmmarketing.com. We've got a webinar, I know, with the report here this week that we're looking for people to sign up on. So take a look at that. I know you're busy, but at least can let the information run in the background while you're out there in the fields, and hopefully our producers can get some things put together here over the next few weeks.
Yeah, log in on your phone and listen while you're going up and down the field, planting whatever crop you're putting in the ground. That's a good suggestion there. John, appreciate the time as always, sir. Thanks for joining us on a Monday. Enjoy the rest of your week, and we'll talk to you next week.
Sounds good. Have a good week, everybody.
John Heinberg with Total Farm Marketing, our guest today on Market Talk. That's going to do it for the show on this Monday, May 9th. Find us online, markettalkag.com. I'm your host, Jesse Allen, wishing you a great rest of your day.